today's early morning selling was not anything to get hyper about, on the basis that this was the signal that we were looking at. The large morning star signal that closed us back up above the T-line, with further confirmation on Friday that the bulls were in control, even bringing it up through the 50. So when they backed off today, after two huge up days, with stochastics coming up and witnessing that the bottom of the trend channel had been reversed, as well as a bounce off the 200-day moving average, all that acted up to was that the bulls had taken control. Today's early selling was just an indication there was some profit taking, but that probably by the end of the day, as we had mentioned in our early morning comments, is that more than likely the markets would open or close near the top end of their trading range, up near where they opened, if not even positive. That was not a guess. That was more an educated analysis based upon we had a strong reversal and it wasn't all of a sudden going to fizzle, especially when people could see the trend channel and where their next target would likely be. So using the graphics of candlestick analysis makes it very simple to not only project when the reversal has occurred, but how long that uptrend should be in progress before we get back up into the overbought condition. Individual stock prices could be recommended, like our recommendation on MTDR this morning, based upon any positive trading, would be breaking out through this resistance level after this little scoop type pattern, once again with stochastics starting to head back up, and after a morning star signal right off the 50-day moving average that closed above the T-line. So positive trading coming out of this area would have told us that this area wasn't acting as a resistance, that we were probably heading higher, based upon knowing that coming out of a scoop pattern usually creates a slingshot effect to the upside. That same analysis occurred with our recommendation of ALJ, based upon a scoop pattern starting with a morning star signal, once again closing above the T-line, and positive trading, buying on any positive trading today, would be further confirming the scoop pattern would be moving out into a positive direction, or a slingshot or a whipsaw type action to the upside. And FU was discovered on our chat room, where we had a left-right combo after a couple dojis in the oversold area. Then they gapped it up and started trading above the T-line today. Made this a excellent place to be buying, and we could see there was a lot of strength, especially with a gap up in the oversold condition. Be buying at a reasonable price, expecting it to go higher, and maybe not today, but over time, based upon our very simple rule, a very strong buy signal with a gap up through the T-line, and this was occurring when the market was sagging. That told you there was something going on with this situation, where relative strength did not come into the picture. You could see graphically there was strong relative strength based upon what the market conditions were. This is not rocket science. This is just using simple graphic patterns that have worked for the last 400 years and taking advantage of knowing what is going on in these patterns based upon what's going on in investor sentiment. That'll be it. We'll see you in the chat rooms.